For the last 6 to 12 months, many commodity prices, especially base metals like copper and food prices, have been skyrocketing. Copper prices are close to all-time highs. They've been just skyrocketing higher. The Chinese are stockpiling in warehouses for their infrastructure projects massive amounts of copper. In my opinion, one of the main reasons that commodity prices almost always seem to have a bid, or if when they crash, the dips are being bought now, is because China and other countries are not recycling their large trade surpluses back into US Treasuries at anywhere near the pace, in many cases not at all, compared to the past. And in my opinion, I was around during the last major commodities bull market from 2009 to 2011, 2012-ish, when China spent roughly half of their entire GDP on infrastructure spending, a lot of commodities and fixed asset investments. And I think the commodities boom that has happened in the last 12 months is probably even larger and faster at a more accelerated pace than back then. And I think a lot of this has to do with supply issues on the supply side. Some of those are related to restrictions that governments have put on. Others are just because of bad capital allocation decisions and how many commodities were in a bear market for many years after that last commodities bull market from 2009 to 2011 for many commodities. There was just a lack of investment and a lack of expectation of increases in a lot of supply for a lot of commodities. There was an enormous amount of capex cuts in a lot of major commodities industries. And now you're starting to see all of this come to fruition. There's just trillions more in currency and credit chasing the same, or in many cases, especially with commodities, fewer goods and services. And you're starting to see examples of just massive imports from China, especially for food. I highlighted the CRB Food Index, which is a chart there showing that it is getting close to 2011 levels. It's rising very, very rapidly. It's just taken off in the last 12 months. It's a chart on the left on your screen in this short little video. And then there's 3 articles if you want to read more in depth. I'll put links to them in the information and description section. Remember how also in Thursday's video, I talked about trucking rates for shipping groceries cross country and how those were up an average of 34% for wholesalers and grocery stores. And those costs in the supply chain are going to be passed on to the customer either with shrinkflation, so the portion size of the food, the price, the sticker price might not move much, if at all, but the portion size is going to drop, or there's actually going to be price increases that are passed on to the customers. And then also on the demand side, from imports from China, you're seeing an enormous amount of corn imports that China is bringing in from the US. And a lot of that appears to be that there's going to be really, really bad weather in northern China, which is one of their major growing areas. So if you want to read more about that, I'll put it in the information description section. But bottom line is that commodity prices, whether that's corn, copper, many others, these charts are just going parabolic. You can see the corn imports there on the right-hand side of your screen from a Bloomberg article. So all these commodities, the demand side is exploding, especially from China, for a lot of commodities like base metal, like copper, and food, soft commodities like corn, wheat, soybeans, and some of the other commodities that are mentioned in the articles that'll be below the video and the links in the information and description section. But overall, there is a lot more fiat currency and credit chasing a lot fewer goods and services, especially supplying commodities where it takes a lot of long-term investment. It could take years, especially for mines or oil wells, for something to come to fruition, for more supply to come online. It just really depends. It's not like shale oil where a well can come on, or shale natural gas where production can come on very quickly. A lot of other commodities like a base metal mine, a gold mine, deep water, offshore oil drilling, these things could take a long time for new supply to come online. So there could be pretty large supply problems, and governments are still creating more fiat currency and credit, and then they're going to take away the money supply numbers for us and tell us that that's not inflationary. So unfortunately, it looks like there's going to be a lot more stagflation hitting people and the government economic data as part of stagflate tax lie, this economic propaganda that they tell us is not going to reflect that. If you want more in-depth research and analysis, you can sign up for only $5 a month and take a look at over 150 articles, charts, and audio podcasts behind the paywall over on my Patreon page. It would really help chip in and pay the bills, because just making YouTube videos doesn't pay the bills, especially what I get in ad revenue. I don't even get 1 cent per click for people clicking on the ads. So there's a lot of bonuses behind the paywall there, including just in the last 10 or so days, there's 3 new articles out about the oil market, the global macro conditions improving for gold miners, and why they've bottomed, in my opinion, and then also a new merger in the gold mining space. So only $5 a month, lots of content behind the paywall. Please chip in for only $5 a month.